Good day traders, it's digital forex. So in this video I'll be talking about how to mark a market structure correctly, or how to identify and mark a market structures correctly. So let's get straight to the video. So marking your market structure or identify your market structure, there's two different things you need to know. And the first one is you need to know what's break of structure. You need to know what is you need to know what's break of structure, and then you need to know what's market structure shift. Yeah, so in this video now I'll be explaining what is break of structure and how to identify break of structure, and I will be explaining market structure shifts and how to identify market structure shifts. So firstly, I will sketch it here and then show the examples on live charts. So let's get straight to it. So break of structure is an action in the market that tells us that market wants to continue in a particular direction. For instance, if the market is currently on bullish, that it's currently buying, break of structure tells us that the market is still buying, market is still on bullish and not yet on bearish. And then market structure shift tells us or indicates when market is about to change direction from a bullish to bearish or from bearish to bullish. So what is break of structure? Let's sketch break of structure. So let's say we have something like this. So this is a bullish bias right now. So how do we identify break of structure? So let's get to it. You can see that when market is coming from here, market created this low and then pushed up and created this high. So the currently we have now is this low is the last low the market gives us before creating this high, and the market went on and creates this high also. So notice what happened after creating this high. Market retraced, market pushed down, retraced, and then after retracing, this is the last low that we have, this last high that we have, this which is the high, and market pushed down to create this higher low, and the market pushed up and closed. For you to identify a very valid break of structure, this push, the candle body must close above the last high. If it is in bullish trend, the body of the candle must close above the last high the market has given us before. So notice what happened here. The market created this lower high, created this higher high, created this lower high, and then pushed above and closed above this last high the market has given us. So this action now is called break of structure. But this action is called break of structure. So after market closed above here, this is a break of structure, and after this break of structure, market gives us this high, as the last high. Now this high has become the last high. You know, it created higher low, and then new high that's above this one. So this one now is no longer valid. So it's break of structure, but we are no longer having any business with it anymore. So market created this high now and then pushed again to create a lower high. So after this lower high, you know that this is the last high the market has given us. So after it created this lower high, it's pushed again, and market must, the candle must close above this high. So immediately this happens, This is a break of structure. This indicates to us that the market wants to continue. This under break of structure, it indicates to us that the market wants to continue buying, or the market wants to continue in a bullish trend. So notice what happened again. After closing, after this break of structure, markets closed here, and this is the last high we have now. So this is the last high we have. A market, after creating this lower high, it created this higher high, and then another lower high. Then the candlestick body closed again above this last high it gives us. So this is a break of structure. This is a break of structure right here. This is another break of structure. And what do we say about break of structure? Break of structure indicates to us that the market wants to continue in a particular direction that it is, or that it was. Now, if market is in bullish, if it's giving us break of structure, it shows us that the market wants to continue going up, or wants to continue in bullish direction. So same thing comes to bearish. The market gives us something like lower low, lower high, lower low, lower high, lower low, lower high, lower low. So notice what happened there. Market created this lower high, created this lower low. This is the last high we have now. And then after this high, market created this low as the last low that we have in the market now. And after creating this lower low, market pushed up, it retraced and created a lower high. So after creating this lower high, it's pushed down, and the body of the candle closes below, or closed below, this last low that it gives us. So this action now is what we call a break of structure. Is what we call a break of structure. So this is a break of structure to the downside. Then after this break of structure, markets push to this point, give us this low as our last low, as our current last low. And then after giving us this low as our last low, markets pushed up again, retraced and created a higher low, and then created a lower low. So it closed, the candle body closed below this low. So this action is also break of structure. You can notice what's happening here. So in this side, you can see the market is continuing the bullishness that it is here, that it was. And this other side, market giving us break of structures to the downside. It indicates that market is still in a bearish bias or bearish direction. So notice what happened again. After breaking structure here, market created this low as our last low now. It gives us this low as our last low, and then retraced to create a lower high, then pushed down again and created a lower low. So this break is also what we call break of structure. So this is a break of structure to the downside. So this indicates to us that the market bias is still active, is still in the same direction that it was before. So let's go to the chart and let me show you a typical example of break of structures. So now this is the live chart. So let me show you what break of structure looks like on the live chart. So notice what happened. Market created this low, then pushed up and created this higher high, and then created this higher high, and then market retraced to this low and then pushed up. And then pushed up to this point and created another higher high right here. Notice what happened. After market gave us this high was the last high that we had. Then market took it out. Look closely. Watch how the candlestick closed above the last high that we had. This is the last high we have. Notice how the candlestick body closed above the high, and this action now is what we call break of structure. This is a break of structure because it indicates to us that the market is still on a buy. The market is still buying. The market is still on a bullish trend. The market is still on a bullish trend. So notice what happened here again. After market closed above, market gives us this low before it creates here. So after market pushed from this lower high and created another higher high right here. From here, market created another higher high and then pushed to and created a lower high, and then again from this lower high, market pushed again. And notice what happened. This was the last high we had before market retraced and created this lower high. The market pushed again and closed above. Look, this is the last high we have, and market closed above the high. So closing above that high now indicates to us that this is a break of structure actually. So closing above is a break of structure. It indicates to us that market is still continuing the direction that it was. So this is the last high that we have. This is the last high that we have before this retracement. So this action is is what we call break of structure. Then notice what happened again. From here, from this lower, this was a low, and from here market pushed to this level, and then shows us that this is the last high that we had. So notice what happened. After this higher high, market pushed down from here. Market pushed to this point, and notice what happened right from this point here. Right from this point, market created this lower high and then pushed and created another higher high right here. You can see market created this higher high right there, and this was the last high that we had before this low. And market taking out this low with the body of the candle. Look at it. Look at it. No, we are not talking about this one. We're talking about this one. See this bullish candle. So market closed above. Look at market closed above the last high that we had, and the action is what we actually call break of structure. So like that, let me give another example. So after market pushed and created this closed above here and created this last high, from here market pushed again to this low to create the lower high, and then pushed for another higher high. And when it gets to this higher high, you can notice that this was the last high we had. The market pushed above market closed above the last high we had and break above it. So this action is what we call break of structure. This action is what we call break of structure. So it continues. It shows us that the market, look at what happened. It's break of structure, break of structure, break of structure. So it indicates to us that market is still continuing the bullish trend that it is, or the bearish trend that it was before. So market is still continuing the trend. So let's go back to sketch, and I will show you what is market structure shift and how do we know market structure shift. So now that we're back to the sketch, let me show you what market structure shift looks like and how to identify market structure shift. Like break of structure, I've talked about break of structure. Break of structure is actually the indication that market is continuing the same direction that it was. Maybe this break of structure shows us that the market is bullish and it's continuing the bullishness that it is, and here shows us that the bearishness is still on. The market is still going to bearishness. But market structure shift actually shows us that the market structure has changed, either from bearishness to bullishness or from bullishness to bearishness. So let me sketch it and show you what market structure shift looks like. So as we all know, this is a bullish market and this is a bullish direction. So markets, as we said here, market gives us this high as our last high here. Market gives us that high as our last high, and then push down and give us this low, lower high right here. Market gives us this lower high and then pushed above and closed above this high. So this above that's closed, or above it, shows us that this is a break of structure. This is a, sorry. So this is a break of structure to the upside, and then created this low retracement, and then this is the last high that we had now. And after this break of structure, this is no longer the low we had. This is the low actually. But after the market breaks here and give us this retracement, so this last low now becomes our low. This now becomes our low, and this high now becomes our high, because market break structure from this high, and then this is now the last high we have. And after this retracement, this is now the low we had. Then markets push from this lower high again and created another new high, which is high, and it's closed above the last high we had. And then this is a break of structure. This is a break of structure. Oh, sorry. This is a break of structure. Wait, I don't know what's wrong with my mouse. Okay. This is a break of structure. So this is the, after breaking this structure, now the last high we have now is this high. And then our last low has now removed from here, because market broke structure and retraced to this point. So after retracing to this point, market broke structure again to the upside, and then this was the last high we had. So market broke this high. So it's another break of structure, and then this, after this retracement, this one has become our low and not this one. So this is the last low we had before this break of structure. Okay. So this is the last low we had before the break of structure. So this is the last low we had. So unlike this one, unlike the break of structure continues the same direction, but market structure shift shows us that the direction of the market has changed from bullish to bearish. So this is the last low we had now, and then this is the last high we had now. So if markets move from this high and then take out this low, you know, if it comes like this and then take out this side, this is another break of structure to the upside. If it does something like this, this is the break of structure to the upside. But market wouldn't do this if in a market structure shift scenario. So instead of creating this low and creating another high to continue the direction, it wouldn't do that. It will, you know, this is the last low we had. If it does something like that and go up like this, this is a break of structure. But markets move and took out this last low that we had. It didn't create another high. It was in a bullish direction before, but after creating this last high that we had, instead of breaking it above to create another break of structure, but it didn't. But it crashed. Market crashed to this point. Instead of taking this out this high, it's crashed, and this was the last low that we had. Not this one, not this one. This was the last low that we had. After market took it out, took the low out, closed below it with the body of the candle. So this action, closing below the last low we had in a bullish market. So this action now is what we call market structure shift. This action is what we call market structure shift, because what it indicates to us that the market has changed from bullishness to bearishness. So after market took out this last low that we had, what market will do is actually to then give us a retracement like this, and then push down for that break of structure, then retracement, break of structure, and so on. So now after this high, market push below here. So now this is a break of structure to the downside. So this is a break of structure to the downside. So market structure shift is actually what tells us that the market has changed from being bullishness to being bearishness. So let me show you the bearish scenario before we go to the live charts. So we have something like this. So we have this price action. Yeah. So we have this price action. The market was bearish, you know, as you say here, taking out the last low we had here in a bearish market. So these are break of structures. These are break of structures. This is another break of structure. Then after market break this last low, and before market break this one, this was the last high we had. Market create lower high, lower low, lower high, lower low, lower high, lower low, lower high, and this is the last lower high that market gives us. The market gave us before taking out this low and give us break of structure. So after market take out this low, instead of market to give us a retracement like this and then take out this low again and continue the bearish direction, the break of structure, that's bearish direction here, market wouldn't do that. What market actually do is that markets, after taking out this low, and this is the last high we have, so markets will push from here. So market will push from here and they take out this last high that it gives us take out this last high that it gave us before this break of structure. So taking out this last high is what we call market structure shift. It's what actually tells us that markets has changed from being bearishness to being bullishness. So after taking this last high that we had, what market will do now is that market will push from here to this low and then break structure and continue like this to the upside. This action actually tells us that market has changed from being bearishness to being bullishness, and this one market tells us that the market has changed from being bullish to bearishness. So let's go to the live chart and let me show you what it looks like on the candle chart. So now that we're on the live chart, let me show you how it works and let me show you what it looks like on the live chart. Notice what's happened here. Market was coming down from, let's say from here. Okay, let's say from here. Market created this high and then broke the high to this low. So after breaking the high, this was the last low we had now actually. Market created this high and then pushed to this low. So pushing to this low, the market took out this last low we had with the body of the candle. With the body of the candle. So this is a break of structure to the downside. The market created this low as the last low. Then observe what happened. So after creating this low, market pushed up. So let me pick this part. So market created this last low and then pushed up to this high, give us this last higher high, and then created this low. Assuming this low has taken out this low with the body of the candle, this could be a break of structure to continuing the market direction to the downside. But market didn't take out this last low. It's rejected right here and then pushed above to this point. And then you notice when it was in the downtrend, because this is a break of structure. This is a break of structure to the downside. This is a break of structure to the downside. So instead of market to create this low, this is a retracement. Instead of market to take out this low and continue the bearishness, but market did the opposite and then pushed and took out this high, this last high that it gave us right here, and closed above. Look at it, closed above the body of the candle. So this indicates to us that the market has changed from being bearish to being bullish. Like the market has changed from bearishness to bullishness. Because why? The market has taken out the last high it gives us in a bearish trend. Instead of taking out this low and continue the break of structure to the downside and continue the downtrend, it did the opposite and break above and took out this last high it gives us here. So this action, and look at how it's closed above. So this action now is what we call market structure shift right here. Let me give you the under example right here. Let me give another example right here. Notice what happened here. So market was in a bullish trend right here. Created this low, this lower high, this higher high, this lower high. This is the last low that market's created now. This is the last low. After creating this last low, markets pushed up. So after creating this last low, markets pushed up and took out this high. It took out this high, and this high, taking out this high with the body of the candle closing above it, is what we call break of structure. So markets created this break of structure. So and then after creating this break of structure, like after breaking above this high, and this is the break of structure, it closed above. So after breaking above this high and reach there, the market was supposed to retrace this way and then break above like this to continue the market direction to the upside. But market didn't break above, market did the opposite. And then markets give us this one as our last low. The market pushed up and took out the last low to give us on its way to bullishness. Like the market was on bullish trend and it took out the last low. It took out this last. So taking out this last low, sorry. So taking out this last low that market gives us, this is a market structure shift because market was on a bullish trend. So instead of market to retrace a little bit and pushed up like it did here, look at pushed up to here, retraced a bit and break above. This is a break of structure. But in this scenario, market didn't do that. Market pushed above here and then crashed, closed below the last low that we had here. And this action is what we call market structure shift. Is one that indicates to us that the market has changed from bullishness to bearishness. You can see what happened here after the market closed below and shows us that it has changed. So notice what happened. So after breaking from here, after breaking this low from here, markets pushed up a bit and created a retracement. And the next thing it did is that it pushed down to this point. Sorry. So markets pushed down from after creating this retracement, markets pushed down to this low and then broke this low, and breaking that low, this is a break of structure now. Because why? Markets closed the candle below the low, so this is a break of structure and it continues like that. But market taking at the last low that it gives us here, this indication that market's direction has changed from bullishness to bearishness, and this is the bullish scenario, the bearish scenario, the bullish scenario rather. So market was on a downtrend here. You see break of structure and then give us this last high and then push. Instead of taking out this last low to continue the bearishness, market did the opposite. It took out the last high it gives us before the low. So after taking out this high with the body of the candle, this is a market structure shift. You can see immediately market closed above, market starts pumping up and not going down. See the market starts pumping up, and look at this other side also. Immediately market take out this last low, market starts dropping and not going up. So this is how you know your market structure. I hope this help. Thanks for watching. And if you want to learn more about market structure, I actually have a video. I'll pin the video in the description below. So go to the video, and if you want to learn how to know market direction, either bullishness, bearishness, or the three type of market movements you have. I talked about it in my last video, so I'll pin the video in the description below. So please go there, check it out, and learn how to know your market direction. Thank you for watching.